Traders, here we are with episode 3, how not to be fooled by randomness, building a strategy. Now, there is a lot of randomness in trading. Not a lot of newer traders think that. They think they are coming into a land of predictability, when the only thing we're certain about is uncertainty. But the difference with traders, professional traders, is we know our reaction in the face of uncertainty. I like this analogy. Think about a bird on a branch. Does the bird trust the branch or does it trust its wings? You have to, in trading, you have to trust your wings to fly in the stock market. Consider the branch as the market. We can't trust it. We got to trust our reaction to it. So in this video, we're going to dive into like building a strategy, how not to be fooled by randomness. Mr. Josh AK-47, what are your thoughts on randomness in trading? We've been doing this for so many years. What are your thoughts there? Predictability, certainty, randomness?
How about I answer a question with the question? And what do you always say about random trading?
Yes, random trading is going to equal random results.
And boom. And so you get to that randomness, brother. You just brought it up to me, and I'll bring it right back to you. And you know all about that.
Yeah, well, I know it too well,
Yeah.
throughout the journey.
You do it, but you preach it all the time. You have such a good saying for it, which I love. I say put your lines in and trade them. We have our sayings we always stick to. That's one I hear you say so often is random trading equals random results. And it will. Early on, like I talked about this early on the stream that we had earlier, I'm all about tracking and journaling and tracking. It didn't take me too long to figure out I was just a bounce trader. And that's all I did. There wasn't a lot of random trading after I figured out I was good at bounce trades. Why? Because when I had the random trading, bounce plays were scattered in there, but how many other terrible trades were there that were a lot more random because I didn't know what I was doing? And the uncertainty, like you talked about, that's the one thing we don't know. And so when we finally find something that has some sort of clear image to it, and there's a little certainty to it, which again, if you track and journal and track and go over your trades, you find one or two things that you could be good at, and you rinse and repeat that day in, day out. It's not randomness, and you don't want to find random trading because it does equal random result.
There are certain trades that have positive EV, expected value, just like if at the blackjack table, you get 2 face cards. That 20 hand is going to win more times than not, and in trading, that's the case as well. The problem is when we see that like this is a high EV hand, but we kind of over leverage, oversize, we go all in, we marry that ticker, and then that one doesn't work out. And we actually saw it this week. Josh, I want to bring up this chart because we were hearing about some traders that were really good traders that just lost their entire career on this one ticker, QMM. Now, this ticker, Mr. Josh actually did very well on this one, but this ticker went from $8 up to $300. Pull that up for you guys to see. Absolutely mind-blowing. And I want to dive into this a little bit because certainly there's money to be made on both sides of it. You just have, this was a ride or ride out trade. You don't want to overstay your welcome on this. $8 to $300. Several people over at TTP did very well on this, including Josh. But let's talk about this because this is what traders need to be cautious of in Pennyland. Yes, there's money to be made, but those outlier trades, if you're on the wrong side of them and you're not managing risk well, it can ruin a good trader's entire career on one misstep. So talk about that a little bit.
Yeah, certainly 100%. When now you get your ordinary average day $1 to $2 ticker, you're running from 1 to 2, you're running from 3 to 5. Probably not going to blow an account. When you see a stock go from essentially 0 to 300, you will definitely, unfortunately, see some accounts blown. And that goes to what you just mentioned before, where people marry a ticker. Maybe they do have a good entry, or maybe they just see the play that seems like this is the good entry price. Well, regardless of, you're going to be wrong. And we know that. And so you can't marry that entry price. You can't marry that ticker. And so what happened with a lot of traders, you saw a spike that runs all the way to 300. No offense, but a little arrogance gets in the way and some ignorance and can certainly ruin some days, weeks, months, and maybe even lives for some traders because they blow up and lose a lot of money. So on the way on the top side there, I love taking the breakout. Going back from seeing these supernovas in the past, not worrying about trying to get that top. I know a lot of traders immediately go, ooh, this is going to be a great short. Ooh, this is going to be a great short. How about flipping and thinking the other way and go, this could be a really good long too as well. Not a lot of traders want to think that way.
Yeah, I got to work on that.
Yeah.
I got to work. Yeah. When the ticker's up from $8 to 100 and then 200 and then 300, certainly it looks like a good short. And I love about your system too, which we need to back test, right? And you certainly have done that. That's the next slide here. Test, track, and verify every setup. And what I love about what you do is you trade very dynamically. We went over this earlier, how the more advanced guys you get, the more years you have under your belt, experience will be your best teacher. You can trade different hands. I'm going to take the pocket ace hand. I'm going to take pocket tens. You're going to take different setups over time. Now, initially, you're thinking you are, but you're just over trading. It takes time. It takes time to learn these setups. So Josh, I mean, he traded that breakout rate on QMMM and made a good amount on that. And what I liked earlier when I asked you, well, how do you manage risk on something like that? Because you were buying, you knew that shorts were over convicted, they were ignorant, they were stuck in it, and you took advantage of that and bought it up at 40 and actually wrote it up, well, like 15, 20 points and made a great amount on it. So you had told me that your stop was essentially your entry, and that's excellent. Yeah. Talk about that a little bit.
Yeah, so when you get those breakout plays, you don't want you want to go FOMO sizing, which I did fat finger an extra zero on that one. I didn't mean to go as big as I went. So you want to go FOMO sizing. You have to find out what that size is. Usually for me, it's 10 shares, 50 shares, maybe 100, not 500. But what I typically see, and in that setup, find these tickers, and you'll see this week, go back and look at OCTO, go back and look at CWD, go back and look at QMMM. Every one of those plays are in the bottom right-hand corner, and I kind of think of it as a, of course, as you see it as a chart. When I say bottom right-hand corner, I'm thinking pull, but it has nothing to do with that. You're just seeing this chart in the bottom right-hand corner, and when it starts spiking, you look out to the left, and there's nothing there. And these plays have never been in 20. They've never been to 30. And so the rule, and the general rule of thumb is once you see the 35 marker, there are a lot of short stuff from 10 to 15 to 20. Imagine at 30, that pressure and that buying. It doesn't take much buying volume now, because you can think about this. We talked about this in the live stream earlier. Say if the float, some of these have smaller, but they're bigger. That float is now what? A lot less. Why? Because you have people stuck in the trade and people long. So what thing you see the float as X on the computer, what FinViz lists, Yahoo Finance lists, but now that float is a lot less, which then reeks for the potential for the squeeze. So anytime you see a ticker get to about 35, and you saw it 3 times in a row, OCTO, CWD, and then QMs, over 35, it's a magnet to 50, and that's where I take my breakout. Get in at the best entry price I can in between 35 and 40, and that becomes your stop loss. Why? Super volatile plays, because most likely, even with some slippage, you may not get out right at your entry price, but it's much better having it there and then seeing a nasty pullback back below, and you've lost hundreds, if not thousands of dollars because you didn't keep it tight on a play like that. You have to keep it, as I say, light and tight on those FOMO type movers.
Yeah, you have to define each edge precisely, because with that breakout play that Josh is talking about, I mean, his stop is right at his entry for that specific setup. That's great risk management on that. But a different edge, like we were discussing earlier, maybe if you're shorting Euphoria, maybe you're expecting to be red initially on it, but you've predefined the level at which you're going to stop out of that one. Maybe it's less euphoric as QMMM. That one certainly. I mean, up to 300, halt after halt after halt. Shorts got crushed on it, and traders with that were doing so well on their equity curve just got killed because of marrying that one ticker. So guys, I can't stress that enough. Predefine the risk before ever entering the trade. Next slide is redefine your trading, guys. So newer traders, a lot of times they will struggle with results-oriented trading. That is, they see green, oh, that must have been a good trade, or I see red, okay, that was a bad trade. When in reality, it can be the opposite of that. You can have good red trades and bad green trades. So stop thinking, as in trading, we have to detach ourselves from the outcome. And Josh was saying earlier when we were trading, we traded live together today. He's like, I don't even look at the P&L anymore. That's kind of the end of day thing for me, because otherwise it's going to influence your decision making. That's a very advanced, wise thing for you guys to hear, because over time, I mean, this is where you want to head. You don't want to look at your P&L and say, oh, I'm green, let me take it off. That's one thing I struggled with a lot. And something I was going over earlier is one of the struggles I've had even for a long time is when I'm red, I tend to be more hopeful that we're going to turn around. And then when I'm green, I'm eager to take the money because I'm fearful of that trade turning back around, fear of losing that money and being red. There are certain fears in trading that we each have, and there's uphill battles that we face, but we don't want to create downhill habits for those. So Mr. Josh, what are your thoughts?
Going right to that, going to the first Blade movie, and actually then we just saw it last year with the Deadpool Wolverine. Blade says in the first one, right before he takes care of, he says, MFers are always trying to ice skate uphill. So he's saying people are always trying to go the hard way. Why are people trying to ice skate uphill? Don't ice skate uphill. Take the easier route. Like again yesterday with me going, hey, supernova play. I'm just going to get my skates on and ride this right on down the hill, right? Instead of trying to ice skate up the hill. And so understand that, and where that comes from, and where I got so comfortable and confident in trading plays like QMMM and OCTO in the middle of the day for those squeeze plays, and not worried at all that I was going to lose, and was confident in the trade. Back to that last one, and we're still in this one. Journal, track. journal and track. Why was your win a good win? Why was that win a lucky win? And what it could have been a lot worse. Why was it the loss a good loss, or why was it a bad loss? What was your stop loss? Why did you not create a target to begin with, right? So you go back through and understand, why am I forming a plan, and what plan am I forming, and see how correct that is day in, day out. Back to 2020, and I start trading what I call the halt strategy, and I'm seeing these plays like QMs and others run. That's where I learned to trade these plays, because I'd go back, I journal them, see what they did and how they reacted, where I get it, where my edge is. We've talked about this in previous lessons, where my edge was, and I find my edge. It's from 35 to 50. I don't care if it goes to 3,000. I don't care about 20 to 30. My edge is 35 to 50. If I get anything over 50, it's icing on the cake. And back to that P&L, I took it off in 2017 because every trader does. You're just glued to it. You're glued to it, and it just hurt my trading style. So I took it off, and since then, it's like a Christmas present. At the end of the day, we've talked about it. Sometimes we get a bag of coal, but there are days when you get the cool, it's hidden behind the Christmas tree, like Christmas, story, and you get your BB gun, or you get a brand new car. There are good days and there's better days, but I like it to be a Christmas present and do not want to trade it. So I look at just the chart.
If you do struggle with the fear of being wrong, fear of losing money, those are two that are amplified with me. One thing that's helped me out, traders, is to take a portion off, and then I feel like I can ignore the rest. And this is a psychological error. This is, if you had a bot performing for you, it wouldn't have this error. But I like to take a piece off, set an adjusted stop, and I know for a fact I'm green on this trade no matter what. It helps me psychologically just to ignore it at that point. So it's like, that's the Christmas for me. I'm either going to be green or greener on the trade. Certainly something that helps me out. I leave leftovers, like leave a 20% position on it to see what happens with.
Definitely. I talk about this. So many traders struggle with that. Why can't I hold longer, Josh? AK, I want to be in these plays longer. Well, do exactly what you just said. When you get that feeling of, or that it hits your target, or you have that feeling and need to take profit, cut out, you're in 100 shares, cut out 90, cut out 80, leave 10%, leave 20%. You're out most of it. Now you can just let that runner run.
Yeah, because on the QMMM, I mean, if you just leave even 20, 30 shares there, that thing runs 200 more points. Pad the wall another $4,000 on that trade.
Yeah, right. Yeah,
exactly.
Yeah.
But going into our next slide here, trade the price action objectively. You can't force your will on the market, guys. When you're trying to be right, it's going to have awful implications on your bottom line performance. You got to trade the price action. For example, Josh, today, WLDS got me. They've been up several 100%. They came out with an offering today, and that's where the mob was, and it continued higher. And I was trying to short that one, but it caught me. They came out with an offering. They diluted their shareholders, but the shareholders didn't care. They put an offering out, 1 million shares at $4, and the thing's still trading, $9-10. So again, I took the loss. It is what it is. Don't force your will in the market. The price action is the truth.
100%. Yeah, you can't be, as I always talk about, I love my guy Thanos from the Marvel series, of course, Avengers. You can't be Thanos. No, not that Thanos was, my point being, like, if you had the Infinity Gauntlet with all the Infinity Stones, you can't be that in the market. I'm going to do this. And that's just not it. But people think that. They get that. They think they have that willpower, so to speak, of forcing that will on what should happen. And that's not it. You let the chart tell you what, like you said, the stock market prints information. It's your understanding of how to, essentially break that down and trade it. You can't say that you can control it and this is what's going to happen. This is going to be it. I'm going to be right every single time.
The only thing I know is I don't know. You gotta have that just reaction. You gotta know your reaction and trade the price action, guys. Ultimately, objectively. But that leads us into some of our own trading styles, guys. I'm going to go over just briefly kind of my main edge. This is my pocket pair ace setup, is hangover trading. So what I'm looking for now, after doing this for nearly 10 years, is day one, I was looking at leading gappers, and I still will formulate a watch list of probably 15 to 20 tickers from the last week or two. But my bread and butter is finding plays that were the leading gapper 2, 3, 4, 5, 6 days ago, where the mob is not at this point and the ticker's still up multiple hundreds of percent. And all you have is long bias traders that are in these names, stuck in them. We all know that feeling. You're stuck in them, deer in headlights. You're holding and hoping and praying the thing turns back around, and it ultimately doesn't. The ticker capitulates in the mob. All the momentum is elsewhere. I like to fade those names on the short side, so I'm looking at those at the open for a potential spike to short into. We're predefining the levels, maybe the previous close, maybe the previous high a day, but defining those levels, taking the short and riding them on down. Now, Josh and I are going to share our experience and our setups and some of the edges that we trade, but it's up to you too, your trading psychology is ultimately your combined experience over time. Pair that with the mentors that you learn from. But ultimately, it's that gut. Our guts speak to Josh and I these days. We've been doing this so long, we see plays and our gut starts screaming like, this is a good setup. And that's ultimately that experience over time.
Right. Just going back to that WLDS play, it was an $8 corridor was the area that he was looking for the short. Kevin was, and that was it. I was on, the live stream. I talked about it and I said, either take the short with him. Here's your 3 trades: short with him or breakout of 8. And then after that, look for the bounce at 8. You could go 2 for 3 right there, which is heck of a trading in stock markets. Kevin went short. It didn't work out. That's fine. You're going to be wrong sometimes, but then could have taken the breakout, could have taken the bounce play, and you're still holding $8 at this point. And that's almost 3 hours later. And so you have multiple bounces at 8. And so that is the key. Find your key in trading, the edge, right? What you're going to do, because I've said this for so long, like kind of back on Kevin. I can say what I want to say and what I like. Kevin can say what he likes. You're going to build off and kind of feed off of, okay, I like this. I'm going to take a little bit of that. I'm going to take a little bit of salt, a little bit of paprika. But then you're going to add your own cayenne pepper. You're going to add your own cumin, right? You're going to add your own spices as well to formulate, like I've said. How many different point guards have there been in the NBA, Kevin? A lot, right? They all do things a little differently. How many quarterbacks in the NFL currently? And they all wish they were probably like Josh Allen or whatever, you name it, but they're not. But they're still getting, hey, I'm a starting quarterback in the NFL. I'm pretty good at what I do, obviously, correct? Same with every, you go to any other sport. They all do things a little differently. And I've always just gone to that because most people watch sports or know of sports. And they go, yeah, that does make sense. They all do things a little different. They're not exactly the same, as in we all compare to my GOAT, at least, Michael Jordan, right? Oh, he's the GOAT. They're always comparing. Is anyone ever going to get there? Most likely, no. You'll get close. You'll get your LeBrons. You'll get your Kobes, but you get my point. They all aspire to be that, but in the end, they find their own little route. I aspire to be Kobe. I aspire to be LeBron James. I aspire to be, Steph Curry. And they take their salt and their pepper from them, but then they add their own spices, their paprika, their cumin, whatever it is down the line, their onion powder, whatever. And they start adding garlic, and they're like, okay, this is who I am as a trader. I'm a little opposite of Kevin. I know he likes that second day fade. Really awesome trades too, by the way. I should be looking for more of those, but there's only so much we can trade right in the stock market. I wish there was like 3 or 4 of me. I need bots essentially. Maybe we're gonna have bots created for these trades, but I like those first day movers, first day gappers. I'm looking to go long, as you can tell. If we're moving up and we're gapping up, I'm 100% in the stock market. We're looking for either bounce plays, old resistance, old topping resistance becomes what? New support. So I'm looking for that, or I'm looking for a nice, good, beautiful flag being built. Resistance, hammerheading, as I call it, hitting 8, hitting 8, hitting 8, hitting 8. Back to WLDS and taking that breakout.
Yeah, I mean, there's certainly money to be made there on the first day gappers. I've seen you work those bounce plays beautifully, and that's the beauty of this, guys. I mean, at Trade the Pool, there's so many different styles, and there's so many different ways of making money. I too wish that I want to trade more dynamically and get involved in some of your setups as well. But that's the beauty of it, guys. There's so many different edges, and I never want to tell someone like what to trade because of that. But there are certain rules in trading that you have to abide by. Like, these are the 10 commandments, and those I will preach. This is risk management. Don't marry tickers, but I'm not going to tell you like, I got this crystal ball, this is exactly what's going to happen. The only crystal ball I have is know what you're going to do in the face of uncertainty. That's the last slide here. The market rewards those who accept uncertainty. And punishes those who demand certainty. It's going to be a very expensive thing for you guys to try to prove to the market that you are right, and ego steps in the way of traders all the time.
Yep. Go back to, I got into 11 when the market conditions are there, and I'll get back to shorting more so. First day runners, where they run, but they give back right away. And we'll get back to that. We're right now, they're not giving back right away. Some are, but I love trend line cracks. Forms a good trend. You crack that, go through the VWAP, gets bearish and move down. Fell in love with that in 21 into 2022. Let's go to 2022. I was trying to short Peloton one day. Gorgeous trend line. Just was bullish in the end, I'll tell you, obviously. And it cracked down, but barely comes back up. New high of day. Stops me out. Forms another trend line. Well, of course, let me stab at this again. Okay, another trend line, right? Then I learned, like you did, and I think you talked about this recently. I was over to, went for another trend line crack. It didn't work, but I realized right away, hey, trend's not working. What trend is working? The trend is not working. Trend line cracks aren't working on this play, so don't try it again and again and again.
Yes.
So understanding what you're seeing and understanding and trading that, but back to what like overall, like we've been seeing in this overall, kind of seems the theme of this lesson is figure out who you are as a trader and start applying that day in, day out, and find that one or two different setups or patterns you can trade. It's not about, listen, I love the fact that I can go long in markets and I can go short in certain markets and just finding and even right now I'm going short sometimes, but going long a little more. Then there are markets where I'm going mostly short, but then I'm going a little long. You have to find that edge and know when to, essentially like we talked about, know when to hold them and know when to fold them. Like you talked about earlier, you may get a pocket pair ace cases, learn to work those to your advantage like I did and go maybe the QMs and bank on it. Then you're going to have some times where you have pocket tens, or maybe even an ace and a 5. But you can work an ace and a 5 and still beat and win and make a little money if you learn to manipulate it in your direction, your edge. But you have to find your edge. And that's the one thing traders don't want to do. They kind of want to do the JG Wentworth commercial. It's my money. I need it now. And they want to just go straight to trading. It takes time.
I can make a 7-2 offsuit work. Just bluff. Just bluff. Yeah, there's a lot to touch on there. I mean, you covered quite a bit. I think one of the important things that you touched on is don't overstay your welcome. That's something we need to add to this episode 3, certainly. If you are someone who buys the dip and sells the rip, but you keep trying and it's not working out, you got to move on. I have a rule, 2 losses per ticker, and I move on if it's not cooperating with me. This is where I see a lot of traders go wrong. So yeah, you could follow everything to a T, really, that we've gone over here, but you're still overstaying your welcome on a ticker. You gotta not do that, because that's still forcing what you want onto that ticker. If it's not listening, trust your wings. Fly away, birdie.
Right. And again, that's why even if you are, like you're talking about, a good bounce trader like myself, or a good trend line crack trader, and then Peloton 2 shorts in a row, 2 trend line cracks didn't work out. It's just a bullish play, and you got to realize that and move on from that ticker, as I did. I said, I'm done with Peloton for the day. Bye. And B, go find another setup, because that trade is not working out for you with that ticker, and that's just going to happen.
And on the flip side, when you're green, keep pushing the accelerator. I've oftentimes not done that, and to my demise, the P&L demise, because let's say you are shorting that trend line crack, and it's just working and working and working. You do it, bounces, short it again, cracks. I mean, it's just, you're in the zone at that point. Why stop trading? So I've done that before, where it's like, I'm red. Now I'm trying to dig my way out of a hole. I dig my way deeper in it rather than putting the shovel down. And then when I'm green, I'm emotionally comfortable. I'm like, I'm green on the day. Let me just walk away green, versus saying, no. This is the time to push the gas. Let's get a little greedy. I know the saying is, pigs get fat, hogs get slaughtered. Right. Not trying to get slaughtered here, but you're trying to trade what is, reacting to what is instead of what you want to be. And that's pretty much the episode, which is the market is going to reward those who accept uncertainty and punish those who demand certainty. Mr. AK-47, final thoughts?
100%. You said it there on the dot. And just even going back to kind of add on to that, pushing the pedal. OCTO on Monday, I went 100 shares. CWD on Tuesday, I went 300. I did go 500 on QMs. I didn't want to. I fat fingered that extra 0 in there because I was already green on the day. I meant to just do 50, but it just showed. I did go 500.
When I fat finger, it doesn't work.
You gotta have that little aura sometimes in the stock market. And again, you just it's kind of like you be humble and just say, thank you, stock market, I'll take what you give me. Yes. And then sometimes she comes back and she will give it.
Absolutely. Good episode, guys. Trade the uncertainty. Don't trade the certainty, guys, and it will be an expensive lesson if you do. But that's episode 3. Thank you, guys. Stay tuned for episode 4. Thank you, AK-47. We'll see you guys in the next one. Bye.